why I decided to buy more Arbitrum even though I got airdrop some tokens, and is this a really interesting opportunity to get into Arbitrum as everyone is selling their airdrop and even the foundation is selling some tokens. Good evening ladies, welcome back to Compound Interesting. In today's video I want to do a deep dive analysis into Arbitrum, everything you need to know, and on a fundamental basis why potentially it could be a good investment right now. But at the end we also have to talk about some drama and some potential drawbacks when it comes to Arbitrum, the token itself, if it's a good investment or not. So what does fundamental analysis mean? Instead of looking at the chart, instead of looking at technical analysis, we're actually going to look at like kind of the fees that Arbitrum is making, the users that Arbitrum is attracting, the developers, that kind of thing, rather than just looking at the price chart. So we're going to be comparing Arbitrum to its various competitors, mostly Polygon and Optimism, because they're the two real competitors for Arbitrum that are direct competitors. But there are also other competitors that have yet to hit the market, such as ZK Sync and other layer 2s such as that. But first, let's just dive straight into the various statistics and information we can find about Arbitrum's usage. So first, let's look at the DEX volume by chain. So DEX, again, is a decentralized exchange. So this is where you can buy and sell crypto, or you can trade crypto without having to KYC, or literally all fully on chain, not done by a central party, like all decentralized. So we can see Arbitrum actually has the second highest DEX volume in the entire world. And this is mostly because of GMX, which is a great platform, which I've talked about before, for decentralized leverage trading. But there are a few others on Arbitrum as well. But we can see it's like more than double the next closest competitor, which is Binance. Binance, I think the top DEX there is PancakeSwap. Like 4 times more DEX volume than Polygon, and 5 or 6 times more than Avalanche, and Optimism like pretty much has no DEX volume in comparisons to Arbitrum. So that was one of the first points. That's like, okay, Arbitrum, like it, just so we are all on the same page. At the moment, Arbitrum, Optimism and Polygon all have a similar fully diluted valuation. So that means if all the tokens were in circulation right now at the current price that they are, they would all roughly have the same market cap. Okay, I just want to quickly compare the market caps of Arbitrum, Optimism and Polygon, so you have an idea of where they stand in valuation terms. So first, on a circulating market cap, so this means on just the tokens that are actually in circulation, we can see Matic or Polygon has a much bigger circulating market cap at about $10 billion, while the orange there in the bottom corner, it's only a little bit of data because it's so recent. That's Arbitrum's circulating market cap, just about 1.5 billion, and then the smallest one there is Optimism at about 700 million, so about half of what Arbitrum is in circulating market cap. While the fully diluted valuation, all of them are just about in line with each other. Actually, Arbitrum has slightly the highest fully diluted valuation. So that's essentially what the market cap would be for all of these coins if all the coins for these projects were in circulation. But Polygon is a much older project, so that's why it has a lot more coins in circulation. But if Arbitrum were to reach the circulated market cap that Polygon is currently at, that would be like a 5x in the price of Arbitrum. But yeah, there are some tokens to come into the market over the next number of years, but we'll get into that in a while. But I just want you to get an idea of where it lies in market cap in relation to its competitors, because we're going to look at a few statistics across these 3 projects so we get a good idea of which one is the best investment. Okay, so we had a look at DEX volume already, but the next metric I want to look at is daily active users. And currently the daily active users for Arbitrum is coming in at 167,000 daily active users. So quite high, but not the highest in the world or anything. Actually, Tron has the highest, and BNB chain has the highest because they have really low fees. So in regards to like EVM compatible chains, Polygon has the highest daily active users, then Ethereum just behind it, and then Arbitrum. So 3rd highest in EVM chains in the world, with almost triple the daily active users that Optimism has. And Optimism is a direct competitor. Both of them are using optimistic rollups. The next major metric that people look at when they're trying to evaluate a cryptocurrency is TVL, or total value locked. So that's the value of the total cryptocurrency actually on the chain at this current time. And for Ethereum, obviously has the highest, Tron coming in second, but Arbitrum has the 4th highest TVL in the world, despite being like number 40 in coin market cap for like its market cap. So as a TVL, double what its closest competitors Polygon and Optimism have. So double the TVL for Arbitrum. Obviously this is a great statistic to see for Arbitrum. The next metric I want to have a look at is revenue for Arbitrum. So revenue is like every time you want to make a transaction on Arbitrum, you pay a fee, and a portion of that fee is actually going to be spent on Ethereum fees. But the remaining fee, so let's say 60% of that transaction fee, is actually going to be Arbitrum's revenue. So this chart is showing the revenue of L1 blockchains and L2 blockchains, and this is in a logarithmic chart just for like ease of comprehension. But we can see Ethereum obviously coming in with like 144 million in fees every day. But let's look at our competitors to Arbitrum. So Arbitrum is earning fees of 2.6 million per day, so more than Polygon, a little bit more, 500,000 more than Polygon per day, and this is like averaged over the last 30 days, and earning 4 times much than Solana or Optimism. So earning quite a lot in fees, meaning people are actually paying to use the network. So, and this like trend hasn't dropped after the airdrop. Like this wasn't just airdrop farmers, I want to make that clear. This has actually increased since the airdrop went live. Now we're going to look at a fancy metric. So this is price comparisons to the fees. So this is kind of like the PE ratio in the stock market. If you know about the PE ratio, essentially the lower the PE ratio, the cheaper the stock is. So here, the lower the PF ratio, the price to the fee ratio, the cheaper the cryptocurrency is. So let's have a look. Arbitrum has a PF ratio of 176 times, while Ethereum name service and Uniswap looking cheap on a price to fee ratio, but in regards to the ones that we're interested in, it's cheaper than Optimism, 363 times for Optimism, and cheaper than Polygon, 223 times. This is the best value out of these 3 competitors if you're looking at a price to fee ratio. Okay, so that's the last. We'll talk about the metrics in regards to Arbitrum, but a few last bullish points. We can see the investors in Arbitrum here, like big names here. DAO also has a huge treasury now that they can use to actually grow the ecosystem, to grow Arbitrum products and the platforms that are actually being built on Arbitrum, such as GMX, Gains Network, etc. So they have $5 billion that they have. Like we can see the breakdown of the purple here is the DAO treasury, so they can use this $5 billion to actually grow the Arbitrum Foundation. So lots of money there to grow. Also, there's an Ethereum improvement proposal coming up, EIP 4844, which will reduce the cost of roll-up transactions even further. So that could increase the amount of transactions on Arbitrum even further and incentivize more people to actually go onto Arbitrum. Already the fees are super cheap on Arbitrum. Okay, so let's talk about the downsides and potential negatives in regards to Arbitrum. Let's take it back to this chart right here showing the breakdown of the token itself. So as we know, there's only about 13% of Arbitrum tokens in circulation right now. And here we can see the lockup period. So the investors and the Arbitrum Foundation aren't going to be getting any more tokens for another couple of years, and then they'll only be getting a certain amount of tokens every month to keep them going. So for the moment, no massive amounts of Arbitrum are going to hit the market, which is good for the token's price. The other thing we should keep in mind is that ZK rollups are about to hit the market, the likes of Starknet and ZK Sync, and they have some advantages over optimistic rollups. So optimistic rollups are the likes of Optimism and Arbitrum, and Polygon also have their optimistic. Like they do all of the stuff Polygon do, but ZK rollups have some advantages over optimistic rollups, and there's a few competitors coming out that could potentially eat the lunch of Arbitrum. The other thing I don't like about Arbitrum token is that the fees for Arbitrum are actually paid in Ethereum. So the Arbitrum token doesn't have any real utility apart from governance. So the only thing you can do with Arbitrum's token is use it for governance, to kind of direct where the Arbitrum ecosystem is going to go. So they dropped this token just for decentralization purposes, and also to actually get money for the treasury, get money for the DAO, and get money for their investors. Essentially, that's what the token was dropped for, because all the fees on Arbitrum, you pay them in ETH, you don't pay them in Arbitrum. So there's not a huge amount of utility for the token itself. Now, we can't finish this video without talking about the drama that happened just yesterday. So basically what happened is the Arbitrum Foundation took tokens and basically took them out of the treasury. The foundation is kind of the team that made Arbitrum, and the DAO treasury is like the decentralized DAO, the decentralized controllers of the Arbitrum token. So any tokens that move from the treasury to, for example, the foundation, or to move to any projects to grow the Arbitrum ecosystem, that should all be done with a vote. For anyone who holds the Arbitrum token has one vote. However, the foundation just went ahead and took a large number, like 100 million tokens from the treasury, even though the Arbitrum community voted against it. But then they came out and said that this was just a ratification, meaning like this was just a formality. This was agreed before the airdrop, and I guess they were just really surprised that people didn't want the money being taken from the treasury given to the foundation. But the foundation need this money for operating expenses. Like, to their credit, what they were requesting is very much in line with what other ecosystems need. Like, they wanted this money for operating expenses. It wasn't a huge amount in comparison to what other ecosystems use from the DAO treasury. But it's not a good look when the only point to your token is for decentralized governance, and the very first proposal that goes through, you don't abide by it, and it doesn't look very decentralized when you're able to take the money anyway. But nevertheless, they did come out and apologize and cleared things up a bit and said they would be much more transparent in the future. And when you look into it a bit more, you can kind of see, okay, fair enough. Okay, fair enough, you're not complete scammers or anything. We understand it was just a mistake on your part. So that's how I'm looking at it. And like, this FUD has kind of potentially has created potentially a good entry into Arbitrum over the next few days. But on a long-term basis, I think Arbitrum, like if you're looking 2 years out into the next bull run, like I think at all the statistics we looked at, all the metrics we looked at, Arbitrum looks really, really good on a fundamental basis. And this FUD that's coming in right now, the price could drop even lower. If crypto crashes, the price probably will drop much lower. There's still a lot of people that have yet to sell their airdrop, so the price could drop even lower. The foundation has gotten a few coins now that they need to sell for operating expenses. So again, the price could go lower. But on a long-term basis, like, you know, it's looking quite undervalued if you're looking a few years out. Big caveat, if Arbitrum can keep these kind of metrics going, like if ZK rollups don't come and take their lunch, or if Optimism and Polygon don't grow their user base. But if Arbitrum can keep up these kind of fee revenue, these daily active users, which I think they do have a good chance of doing, then it's looking very undervalued in my personal opinion. Just on a technical analysis, like I don't do technical analysis, but we can see it has been, like, since it's dropped, the price has been ranging between these two levels. And if it managed to break through either of these levels, that could indicate like the direction that the trend has chosen. So for example, if it dropped meaningfully below $1.10, it's likely that it will drop all the way down to, let's say, 80 cents. However, if it does break above this like $1.40 or $1.50 level, like in and around there, meaningfully, that could indicate that we could get a little bit of a run in the short term. Alright, really hope you enjoyed this video. Thank you so much for watching. See you in the next one.